Well, the stock market's been trying to find some stabilization after a very wild week, and we'll be watching to see how the markets respond to the latest inflation numbers, which certainly the outlook for interest rates is one of the key short-term things to watch when it comes to the stock market. Bob Iaccino is co-founder and chief market strategist at Path Trading Partners and one of our regular guests. And Bob, I guess if you think about the things that are on the to-do list of tackling this week, I would imagine it's digesting the latest economic numbers and specifically those ones on the inflation front. What are you going to be watching for?
Yeah, well, you hit it right on the head, John. I appreciate the introduction there. We have a situation now where we've actually got a week where we've got some data. Last week in the U.S. was very light on the data. It was very light on Fed speak. We've got Fed speak this week, and we have inflation data. And based on Fed Governor Michelle Bowman's comments over the weekend, now, full disclosure, she's a well-known hawk. So she's been very sort of negative on early rate cuts. She actually pointed toward the possibility of rate cuts. She said, if inflation keeps moving steadily toward 2%, we tend to forget when we get this sort of exuberance about rate cuts that we're still at about a 2.4, 2.6% unemployment rate of change. So that means prices are still going up on the whole, and the Fed doesn't love that, but they do see it moving in the direction they want, and they do want to avoid a recession. So that's sort of the juxtaposition. Michelle Bowman actually acknowledged that rate cuts would likely be appropriate, but her phrasing was more of it being a policy adjustment, where if you look 2 weeks ago, the CME Fed Watch tool had the probability of a 50 basis point rate cut in September at 85.6%. That's now down to 49% with a 51% probability of a 25 basis point rate cut. But that adds up to 100% probability of a rate cut in September.
Really helpful context there. Now, I guess on the inflation front, even if there is a chorus of people who think that worrying about inflation at this point is overdone, I can't help but look at what's been happening with gold this year. It's been a very busy day. We've already spoken to two gold CEOs, one out with earnings, one with a big deal story, and both are pointing to a long-term trend for gold that looks pretty good. Now, as an investor, you're keeping tabs on gold as well. How are you thinking about it from the investing side right now?
Well, I'm a huge gold bull right now, and I'm not a gold bug. That's not something I've been my entire career. Just since about November of 2022, it seemed pretty clear to me that there was only one path for gold. Well, I should rephrase that in a more fair way. There were three paths for gold, sideways, down, and up, and two of the three seemed to support the up prospects for gold. And I think we're still in that situation. If you were going to see gold fall, you have to see the Fed fighting inflation. You have to see tighter monetary policy. And there doesn't seem to be any way, even with a resurgence of inflation, at least in the short term, that the Fed fights that resurgence, at least not initially. They seem to have a recession much more in their windshield and inflation in their rearview mirror than they have at any time in the last, say, 24 months. So when you look at gold, one of the best performing times for gold is when inflation is steady or even ramping back up a little bit and the Fed is not fighting it, which seems to me to be the best case for gold. A sort of a mediocre up or bullish case for gold is that the Fed is cutting rates and inflation is slowly moving lower, but it's still present. That seems to me to be the most likely scenario. The least likely scenario is that inflation is heading down toward 1%. And the economy is growing with the Fed keeping rates steady. That's the least likely, and that's the most bearish look for gold.
Now, before I let you go, I also just want to get your vantage point on tech. And we've gotten through a lot of earnings stories. We haven't gotten to the NVIDIA quarterly results yet. But I would have to think that'll be another catalyst to watch upcoming. And I say that because Palantir, a stock that you've been watching, came out with quarterly results. And we were reminded of the power of businesses that are leaning into AI.
Yeah, Palantir to me is a great story, and it's a great stock for this particular moment. And the reason I say that is because NVIDIA, ASML, ARM, Qualcomm, their charts look very poor right now. That doesn't mean that they're not going to gap up and break out higher. They may. But Palantir's chart looks good, number one. Number two, the company is using excess cash to actually increase their buyback program. Their buyback program is huge. They've got virtually no debt. They've got $4 billion in cash and cash equivalents on hand. And as your previous guest said, there's very few scenarios where we're not looking at tech as being growth industries going forward. I like Palantir specifically because they're not involved in the building of AI. They're very effective at using AI in two of their specific programs. They're using AI the right way to create advantages for their clients, and they're way ahead of their competition on it.
All right, Bob.